Hello, everybody, and welcome back to tracking our local shifting real estate market here in southern New Jersey, Burlington, Camden, Gloucester counties, 900,000 and below. And there's two big things happening this week, one from a real estate perspective, and another from my personal life perspective. So, the latter first, I'm actually getting married in 2 days. So, yay, very excited for that, super happy to begin that married life. And I still was not going to miss out on a shift tracker this week. I told my fiance I might not do it this week because we got a lot of stuff going, but don't tell her, but she's going to see this anyway. But I wanted to make sure I still got you our updates because we're here at the end of May and we have some monthly averages to go over. And for lack of a better word, it's just going to be kind of surprising to see the scope of where we are with May factoring in. So let's run through our stats for this week. Real quick, interest rate wise, we have had a third decrease in a row of interest rates. Now, it hasn't come down that far, but we were up at like 7.2% base rate. We're now under 7% for our base rate. Again, this is base rate, guys. Your lender's going to always give you something a little higher than this. But from our Freddie Mac website, just taking it right off the same website that all of y'all can get to. The link is in this YouTube thing. That's what they said for this week is our base rate. So that's good to see. At least they're coming down. Not anything meaningful, though. It's going to be hovering. But let's take a look at this week. So last week we had a huge jump in our total active listings. We had a massive week. We did come back to earth a little bit this week. So we had 1445 was where we were at for total active listings last week, down to 1375 this week. So we did slide back down to where the lowest that we've had in May. We were there that last week in April. And it's because, new listings was way, 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 way lower than we've been the past couple of weeks. We had 396, 340, 414. 264 for this week. 287 on our under contracts, again, well below, and 248 on our closed, pretty darn low, except for that week 20, the second week of May, where for whatever reason we had two anomalous weeks of a little lower. Our expired, withdrawn, and canceled was very low at only 49, and that's surprising because normally we see that kind of the end of the month. A little confusing because while it is technically the end of the month, most of those end on the actual 31st or the 1st of what would be June. So I actually expect in next week's update, we'll probably see that number account for some of those end of the month expired listings. Our price reductions at 135, almost exactly 10% of what our total active listings have been in any given week. So that's on par. And then our days on market actually went up. So we went from 52 up to 56. And we went from 19 up to 23 when we had been in a downward slide for our days on market for a good bit, basically since the start of the year, all the way down to last week, which was the fastest that it had been in a while. Total volume did also come down, but that's not surprising because our total active listings. But look down here. Excuse me, didn't mean to cough right in the microphone. I didn't bother putting the highest median list price ever next to the stat because I think it kind of goes without saying now. That's where we're going to be with these listing prices. 364,850. Another not a small jump from where we were last week, which was the highest ever. Then 2 weeks before was kind of the highest ever, and so forth. So again, 364, that is massive. And we get to do, since we're end of the month, we actually get to look at our graphs for this week. So that's what I'm going to pull up. I'm excited to kind of just show. And again, this is where I was saying kind of you're just going to be surprised by the scope. So let me move my fat head up here and let's go over a couple things. And I think the first thing that I want to talk about is that average median list price. So again, the green was last year. The green is 2023. Inflationary period of last year, large increase, inventory was low, and then we had a good stagnation of the listing prices throughout the last half of the year. We had it just drop just a little bit in January, but we are literally off the chart here. I actually should have updated my chart here before starting recording this. I didn't even realize that it went off of the chart here. But this chart only goes up to 350. We're now at $361, $38 for that. So that is a big increase here from that. So I apologize. I should have updated it. I didn't even realize we went off the scale of recording. So that huge increase, right? 361 coming back from February of 2023. We have gone up $50,000 in median list price for the average in basically, 15 months? 15 months have gone up $50,000. So anybody that owns a home, congratulations. You've probably earned about $50,000 of equity in your home over that last 15 months. So if anybody's feeling a little bit of a penny pinch on whether it be income or anything like that, inflation, prices, just know you actually have been sitting on quite a bit of money through this last period. So again, sorry for that update on that. But let's talk about our days on market here, because that's another one that we really like to track. Again, blue is last year and red is this year, and you can see normally we're going to see this in the spring months. We're going to see a pretty steady decline in days on market as things begin to speed up throughout the year. But this year, it's just dropped more precipitously. It has been a faster return to that fast market than we saw last year, which was a little bit more gradual, even though we had the active listings that really kind of tanked. So I'll show you that next. But this is where we see the 2024 numbers. It's just gotten really, really fast. Not surprising. It's a very similar feel where people are saying, hey, it's still pretty fast to buy a home. Things are going off the market quickly, and they are correct. So last one here are our average active total listings. Now, this one is a little interesting. Last year, the blue was that beginning period of the year where we had heavy inflation, and everybody just kind of went on stop for a second, just figuring out what the heck is going on. And so we saw active total listings really drop. But then they made a big rebound in the second half of last year. So you can see in blue, right, we dropped really quickly down to April. And then every month, all the way into December, we just had a really nice kind of increase in those total active listings. A little dip in December, unsurprising with the holidays, and came right back to that 1501 or excuse me, we were down here 1471. And then we continued to slide all the way down to 1289. We ended up bottoming out at 1224, but we have actually started to increase. So you can see there's a little bit of an inverse correlation at this time of the year, these past 3 months, as compared to last year at these 3 months. Last year, we were just bottoming out. There was nothing on the market, but that's not quite the story. You can see this May at 1407, our average total active listings. That is sticking out like a sore thumb for me in terms of where we are this year in this market with active listings, where we were last year. And I have to say, I think it's because, and I think this increase in this entire couple past months, it's been all about interest rates. I don't normally blame interest rates for the issues of the market, but I think they do have to start getting blamed a little bit. A lot of people that even when interest rates were high, they were still going to buy, but there are a lot of people who have just said, no, I'm just not going to buy in this higher than I'm used to interest rate market. I'm going to hold off. Couple that with our median list price going up to 364. You have a 7% or more interest rate, and you got median list prices at the highest they've been ever. And then you got our average sold to list price at 102. So still, most homes are selling over their asking price, which is already inflated. And then we have interest rates that are still higher than where they were for a 10-year period. So I think the market's starting to respond. I said this, I think, about 2 weekends ago. I got a good comment from somebody that kind of broke it down. But I really think that these interest rates have started to finally have the effect of pushing a lot more inventory on the market, at least in our area. Now, we are somewhat insulated. If you look at what's going on in some other areas of the country, their active listings have gone up 200, 300, 400%. I know Austin, Texas, where Keller Williams headquarters is located, they had something like a 440% increase in the total active listings just in this year alone. So they're really having inventory come on the market, sitting on the market, and waiting a little while to sell if they sell at all. So what can we start to take from this as we go forward, as we start to wrap up here? If these interest rates don't come back down anytime soon, because I don't see the price coming down much, but it's going to be these interest rates that need to come down. Now, could there be a period where this total active listing number starts to go up so much that we do start to see a decrease in median list price? It's possible if we had steady inflation over the last 20 months. We have not. We've had ridiculous inflation. Almost 20%, we've lost almost 20% of the value of the dollar in the last, 18 to 20 months. And so, yes, while the demand for homes may subside because of that inflation in the value of the dollar, that asset is just going to be worth more monetarily from a dollar standpoint. The value of it hasn't changed all that much. It's gone up slightly, but the cumulative dollar value that you have to place on that has gone up because of that inflation. So I'm not quite sure what to see here, but I do think that median list price is probably going to maybe level off and just continue to inch up like this. But if we don't have something that changes in these list prices, and we don't have something that changes in these interest rates, this total active listing number will likely continue to rise, and maybe not in a great way. So I would say for sellers, careful, you may be missing a mark here where it's still somewhat competitive. You're still getting these average sold to list prices that are pretty solid. I'm curious if that will continue for long term in the future. So anyway, y'all, that's going to do it for us here, week 22 of May. Next week, we get to start into the first week of June. I'll be doing that as a married man. So anyway, thank you everybody for tracking along with us and keeping an eye on things. And I look forward to speaking with you next week.